come January 31st, we had an internal deadline of having a feature complete spec release. This is the first release, the January pre-release of the phase 0 spec, and I'll go into a little bit what these phases are. And this, for me and for the clients, was really the mark of, okay, we're out of research, we're into a full-blown engineering effort. And really, although there was a ton of client work going on before then, most of the incredible progress has really happened since this time point. So through today, there are a number of, congratulations, there are a number of testnets, single client testnets out, and a number that are in the works. It's been super exciting for me personally, just to be working on this project for so long and to finally see and feel something tangible. Super pumped. This is just some dump of I think maybe it's Nimbus. Actually, I'm not sure. Of a testnet. The phase 1 specs are happening rapidly in parallel. Major simplifications have been happening on that front. And as I said, the initial client testnets.
Welcome to Trustnodes News. Today's latest follows.
Trade to add Bitcoin and Ethereum. Trade, a broker with circa 5 million customers, $3 billion in yearly revenue and $65 billion in total assets, is to launch Bitcoin and Ethereum trading according to unnamed sources. The firm will start by adding Bitcoin and Ethereum, and will consider adding other currencies in the future, said the person, who asked to remain anonymous because the matter is private. A spokesman for Trade declined to comment, Bloomberg says. Nathaniel Popper tweeted, in the wake of TD Ameritrade quietly opening Bitcoin trading for some of its customers, I was just told that E-Trade is preparing to begin offering both Bitcoin and Ether trading to its 5 million or so customers and is just finalizing a third party to actually hold the coins. Since they're finalizing agreements for a third party to hold the coins, that means this is spot Bitcoin and Ethereum trading, somewhat similar to DAX or Bitstamp. Details are sparse, however, with Trade not stating anything publicly at the time of publishing. Ameritrade, another very big broker with $5.4 billion in yearly revenue, is also preparing to launch crypto spot trading. They've seemingly begun testing it already, with the full launch expected sometime this quarter. Copyright Trustnodes.com. Moody's, blockchain tech makes securitized trades more efficient, but devs might introduce risks. Moody's, one of the biggest credit rating agency with yearly revenue of $4.2 billion, has highlighted the growing attraction of blockchain tech in a new report that comes at a hefty price of $750 for non-subscribers. Structured Finance, Global, blockchain improves operational efficiency for securitizations, amid new risks, looks at the potential use of blockchain in securitization, that is debt issuance or the creation of new tradable instruments. Frank Cervini, senior analyst at Moody's, says blockchain usage in securitization is still in a very early stage, but banks and other financial institutions are looking at its utilization. Its usage at scale would introduce new risks, Cervini says, including a potential over-reliance on a few developers or dev studios. New key transaction parties will be introduced to the process, namely the entities that serve as developer, provider and operator of a blockchain. They may be either closely linked or identical with the originator, or independent third-party service providers, which could lead to a certain degree of counterparty concentration risk, they say. As a new field, blockchain tech has a shortage of talent with smart contract experts few and far in between. Although issuing a token arguably can be done by anyone through just some template, at scale there would be numerous considerations, including security. Moody's says potential reliance on the same dev studio by multiple securitizations could introduce risks that may also assume a systemic component. In other words, they are arguing for decentralization, not only at the tech level, but also in social aspects like what dev consultants are utilized. Decentralization is known to facilitate robustness because if one component fails then the rest are not affected. If however all are using the same devs, there may be a groupthink factor which could introduce systemic risks. That's in part why Ethereum has multiple development teams and multiple clients. Their work towards upgrading ETH to ETH 2.0, for example, has Nimbus, Prismatic Labs, Lighthouse, and others, all building the same thing, but separately. They take subtle different approaches, like what language is used and so on, with all these clients then able to communicate with each other and able to stay on the same page, but if one of them has a bug then the other two clients might not be affected, with the network continuing to operate undisturbed. Taking the same approach for a smart contract would be difficult because the network might not be able to simultaneously run two versions of the same code for the same token, but there are two languages, Solidity and Viper. Other blockchains have a more centralized approach, and because they might not have a public blockchain version, there's less creative incentive through the profit motive for devs across the globe to develop the necessary skills. There might thus be less choices of a dev studio, with the base tech probably eventually being one dominant blockchain due to the compounding effects. That being, as more people work on something, that something might incrementally improve more quickly, making entrance barriers lower, thus adding more people in a circle until a plateau. The entire world running on one blockchain, however, does introduce its own systemic risks, especially from core developers who can develop groupthink, or can be captured and so on. That came to the fore during the block size debate, so conceptually the aim has to be for the main public blockchain to reach a stage where it is effectively set in stone or is very difficult to change. That will probably happen naturally. As the technology improves, it will probably eventually reach a stage where the benefits of new improvements are lower than the cost of the upgrade. If NHS health records, for example, are on the blockchain, persuading them to upgrade would at some point become very difficult, leading to the main blockchain becoming static from a base code point of view. New blockchains then may rise to be more nimble, but logically there would have to be an inventive breakthrough to justify switching costs. Meaning the tech will probably reach a point where there are no systemic risks, whether social or otherwise, like the internet, but what is built on top of it would have its own considerations. Copyrights Trustnodes.com.
Just do whatever you want.
That's it for today. See you tomorrow.